Zeta Global is an interesting advertising company. The company operates a data-driven cloud platform that provides enterprises with intelligence and marketing automation software in the United States. It competes with companies like The Trade Desk. The Zeta Global Holdings was one of the top requested videos for me to complete this week. As you know, channel members have the right to vote for which videos I create in the week ahead, and Zeta Global was one of the top 10 vote getters. So in this video, I'll answer if I think Zeta Global stock is a buying opportunity for 2026.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I wanted to evaluate the company's revenue growth over recent years, and it's demonstrated excellent expansion, increasing sales from 300 million in 2019 to 1.2 billion in the most recent trailing 12-month period. The company recently reported quarterly financial results in early November that exceeded expectations, and the management team revised their forecast upwards because the year had gone better than the company had expected. Of course, we also got data for the overall advertising industry worldwide. The growth rate in advertising in 2025 was much better than was initially expected, even just a few months ago. The market forecasters were expecting more headwinds in the advertising industry as a result of the increase in tariffs, but the advertising economy performed much better than expected. For Zeta Global, its revenue has compounded at a growth rate of 27% in this time. Now, more importantly, the company has utilized improving margins as its revenue has increased. The return on invested capital improved from a negative 129% in 2021 up to a positive 1.2% in the most recent trailing 12-month period. Now, a figure of 1.2% is not good, but what is attractive is the company's trendline improvement of its returns on invested capital. And I always say I don't mind investing in unprofitable companies or companies with negative ROIC or negative cash flow, as long as they demonstrate considerable improvement, and I am seeing improvement here for Zeta Global. And I see a similar trend line improvement for the company's cash flow from operations. As you can see, over the several year period I've highlighted, the company's cash flow from operations has improved from around 10% all the way up to 14.6% in the most recent trailing 12-month period. So now that we looked at performance metrics, let's get into valuation. So when measuring by the forward price to earnings ratio, Zeta Global is trading at a forward PE of 22, which is near the lowest this stock has traded for according to this valuation metric, going all the way back to early 2022. So when measuring by the forward PE ratio, the stock looked undervalued. But what about using my proprietary discounted cash flow model? Well, I updated this model this morning, including revised cash flow expectations for the company, as analysts have upgraded their cash flow expectations in future years. The intrinsic value per share I calculated for Zeta Global is $27.19 per share. The current market price is $19.18 per share. So even after applying a margin of safety, Zeta Global stock looks undervalued based on the current market prices. So to answer the question I posed in the headline, is Zeta Global stock a buying opportunity for 2026? I think so. I reiterated my buy rating for Zeta Global stock today on December 8th, 2025. Of course, consider that there are risks with any investment you make, but I feel the risk versus reward is worthwhile here for Zeta Global stock investors. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.